Hello, we welcome you to this very special episode of the morning show.
Our Independence Day special.
It's the 77th Independence Day today as the nation is draped in tricolour and patriotism. We've come a long way since August 15, 1947, but the country remains a work in progress. Robert Frost's words beautifully capture the essence of this journey that is both remarkable and ongoing. The poet had said, "The woods are lovely, dark and deep, but I have promises to keep, and miles to go before I sleep, and miles to go before I sleep."
The imposing buildings behind us also signify transition. North and South blocks, which have been the seat of power for decades now, are set to turn into museums. In today's special show, which comes with 3 segments, we are offering a peek into what all changed in the last 1 year and what the road ahead looks like.
In his 2022 Independence Day speech, Prime Minister Narendra Modi had laid down the Panchapran of 5 vows to take the country forward in the next 25 years. Today's speech too reflects the same ambition, that is, to make India a developed nation.
While inaugurating the Bharat Mandapam at Pragati Maidan, New Delhi, PM Modi had assured that India will become the world's 3rd largest economy in his 3rd term. So how far has India come in its economic journey? Dibargya Sanyal checks up the report card.
India is the world's 5th largest economy. Only the US, China, Japan, and Germany are ahead of it. And according to the International Monetary Fund, or IMF, the country is forecast to become the 3rd largest economy by 2027, overtaking Japan and Germany. Prime Minister Narendra Modi too claims that India will figure in the top 3 economies of the world in his 3rd term. To get the 3rd term, Modi will face general elections sometime next year. There are a few reasons which led to India's rise as an economic power. While India's GDP grew by 83% between 2014 and 2023, several other competing countries stagnated. Our growth rate was a shade lower than the 84% increase achieved by China during this period. The US GDP increased by 54%. However, barring these 3 countries, all the other top 10 countries have seen their GDP stagnate or even contract. Despite India's economy not growing as fast as it would like to, meaning 8 to 9% per annum, even a more modest growth rate of 6% per annum will be enough for India to overtake Germany and Japan by 2027. India grew at a rate of 7.2% in FY23. India has also made major strides in other aspects of the economy as well. Some of the Modi government's flagship schemes have started to bear fruit. Revenue from the Goods and Services Tax or GST collected in March this year was more than 1,60,000 crore rupees, the 2nd highest monthly collections ever since its launch in July 2017. The total gross revenue in FY23 surpassed 18 trillion rupees with over 22% year-on-year growth. In industrial policy too, Apple's decisive manufacturing shift towards India came as a major boost to the government's Make in India ambitions. The production of iPhones by the tech giant's contract manufacturers reportedly tripled to $7 billion in FY23. The Cupertino-based company now produces almost 7% of its iPhones in India as against a mere 1% in 2021, Bloomberg reported. Of the iPhones produced in India last fiscal year, $5 billion worth of smartphones were exported, the report said, citing sources. The rapid proliferation of PLI schemes also means that government's merit-based subsidies for industrial growth now expands across 14 sectors, including mobile manufacturing and specified electronic components, manufacturing of medical devices, automobiles and auto components, specialty steel, food products, textile products, solar PV modules, toys, and more. However, the government has continued its trade policy reversals. India's G20 presidency saw us rooting for international cooperation, and we also entered a number of bilateral FTAs. However, we steered clear of multilateral trade agreements like the Indo-Pacific Economic Framework for Prosperity or IPEF's trade pillar. There are also, of course, the most recent curbs on laptop imports.
Number one, the economy has clearly recovered from the pandemic. I mean, the GST has settled down. Two, there is a lot of entrepreneurial drive, which is reflected in the proliferation of startups. I think the one area where we have regressed is in the area of openness to trade. Tariffs have been raised, and most recently, the decision to impose licensing on computers, which fortunately, and I give the ministry credit for that, has now been withdrawn. This is not a world in which people would say there should be no industrial policy. All over the world, governments are intervening. But the intervention must be strategically designed, and secondly, it should be well structured.
Experts point out more than the absolute GDP, per capita GDP has often been cited as a more essential indicator of economic growth. And India's rankings in terms of GDP per capita have fallen with rising rankings in absolute GDP. Despite India's rise to the top 5 club, per capita GDP rankings have been above 150 in a list of 200 plus countries. It is at the level of the individual that India's economic portrait starts showing signs of strain. Recent government reports like the NHFS, MIS, and MPS have revealed that India is still lacking in crucial markers like nutrition, workforce participation rate, educational outcomes, etc. Over half of all women and children in the country are anemic, and the number has increased in the last 3 years. NFHS 5 data shows anemia rates increased from 53% to 57% in women and 58% to 67% in children in 2019-21. A total of 29.3% of people aged 15 to 24 years are not in education, employment, or training, shows the MIS. Most importantly, while the unemployment rate for persons aged 15 years and above in urban areas declined to 6.8% in the final quarter of FY 2023 from 8.2% a year ago, economists believe it is still a major chink in India's macroeconomic armor.
I think the most important indicator for us is actually that of employment. Because one of the frightening things in India is that this high growth is not coming with increases in good quality employment. More than half of them are self-employed. About 80% of them are employed in informal capacity. That is, they have no legal protection, nothing. We are trying to pretend that there are more formal workers by saying anyone who has signed up for the EPF, the Employee Provident Fund, is a formal worker. Now, that's not true, because in fact, in the EPF rolls, that about half of them are defunct in the sense that somebody signed up, but then has not, subsequently paid in. Many of them don't even know that they have these rights.
What then are the major challenges India might face in realizing its economic goals before the next 15th of August? And how can we counter these challenges?
One prime challenge really is maintaining the macro balance of the economy. That is not going to be very easy. Fiscal consolidation means not just the center, but also the states. And unfortunately, there is a very strong pressure for, as it were, giveaways, freebies, non-merit subsidies to expand. And in the run-up to an election, that's almost certain to happen anyway, okay? Even for the central government, some of the bases on which the fiscal deficit was going to be contained involved very substantial privatization of the existing system and also greater reliance on PPP rather than government investment. That doesn't seem to be moving as was originally intended. We've not, except for Air India, we've not really successfully privatized any public sector company practically.
We have terrible human development indicators, nutrition, health. So we first of all need to dramatically increase our spending on health, education, nutrition, sanitation, the basic essential social services. And for heaven's sake, fill all the vacancies. There are so many vacancies in public employment. We don't have enough doctors, enough nurses, enough teachers, enough people to clean the schools, enough security for the schools, etc. So all of this is something that can be done very quickly, very easily. So a focus on social services, on agriculture, on small, medium, and micro enterprises. That helps the employment problem, that helps the nutrition problem, that helps the livelihood issue, that helps the overall human development.
Therefore, while experts point out that the Indian economy will easily breach into the top 3 economies of the world, they also point out that the real test and proof of our economic development will come with a positive uptick in more fine-grained demographic markers. A sharp focus on uplifting the living conditions of the people will help India reap the demographic dividend.
He's making plans for an early retirement. Business Standard.
Between today's and last year's Independence Day, India Inc. has seen a lot of churn. Unfolding of a major corporate crisis due to a US short sellers report was, of course, the biggest one. Then the rise of AI on the tech horizon, which is still clearing its throat and is yet to sing. Nudges and exhortations to India Inc. to loosen its purse string were also one of the highlights.
India Inc. has indeed witnessed a lot of developments during the period. So, what do these developments suggest about the themes that will drive corporate India and come up for its urgent consideration in the coming 12 months? Pastor Kumar brings you the answer.
The 2024 Lok Sabha elections will be on top of India Inc.'s mind in the coming months. However, there will be other factors driving corporate India too. Prime Minister Narendra Modi's address today from the ramparts of the Red Fort is an opportune moment to analyze what these could be, based on an analysis of the crucial developments that have occurred since the PM's last Independence Day address. Allegations made against the Adani Group in a report by US-based short seller Hindenburg Research comprised one such key development. The January 24th report alleged that the Adani Group had engaged in what it called a brazen stock manipulation and accounting fraud scheme. Adani responded by way of a 413-page document. Rejecting its allegations, the group described the short seller's conduct as securities fraud. Subsequently, in May, an interim report by a Supreme Court appointed panel said that prima facie, it would not be possible to conclude if there has been a regulatory failure around the allegation of price manipulation in the Adani scripts. Nonetheless, the repercussions of the report, enhanced global scrutiny, and a renewed emphasis on corporate governance could dominate India Inc.'s priorities going ahead. The mounting troubles at Byju's and at some other Indian startups have also raised questions about a governance deficit in this ecosystem too. Along with the prolonged funding winter, the startup sector is facing a trust deficit, with a chasm emerging between investors and founders.
Hindenburg has said a lot about Adani, etc. But somewhere in their report, they've also said it kind of speaks to the governance practices in India. And that's something which we have taken strong exception to. The governance practices of Indian firms have improved over the last decade, and more significantly so since the New Companies Act has come into force. Boards are much more aware of what their responsibilities are. They're kind of asking the right questions. There is one area which kind of still stands out, which needs a lot of intervention and work, and that is these startups. So you look at those which have listed and even those which are not listed, but you read about what is happening there. it is an area of concern. I have a view that this is so because the investors and primarily the private equity investors have given them a long rope. In the aggregate, governance has improved, but the old that it's not a destination, but it's a journey holds. Our market practices will change, the investors' expectations will change, and therefore companies will continue to increase disclosure levels, improve and make it more meaningful, and ask companies the right questions. And the companies will be mindful of the fact that, look, other than the promoters, there are others in the room whose interests they're supposed to balance with that of the company's own interests.
There are other concerns that will also be on India Inc.'s mind beyond governance.
There are a couple of themes which have been playing out over the last few years, and I expect they will continue to play out. If you would have spoken to the boards, they would have said, okay, let's focus on digitizing our business. That conversation, I don't think we can turn around and say that, okay, that was yesterday's conversation and therefore we don't have to focus on it. Boards will have to continue to focus on it. To that, you have to now add some of the changes which are taking place on account of technology itself. Generative AI is something which is top of everyone's mind. They want to know what is happening. What is it that they as companies can do will disrupt their business? Does it mean a little bit of the same? So boards have to grapple with that.
On the topic of technology adoption, while artificial intelligence is not a new thing for either the Indian IT services sector or India Inc., the launch of OpenAI's chatbot, ChatGPT, in November of 2022 has brought discussions about the benefits and pitfalls of the latest variant called generative AI to the fore. As companies scramble to understand how Gen AI could fit into their business, India's $245 billion IT services industry, in particular, will be wrestling with complex questions as it looks to ride the next big disruption.
And you asked that pertinent question, the readiness of the industry. I think there's one critical factor that a lot of enterprises today are looking at 4 factors, which are apprehensions. And factor number 1 is copyright issues in generative AI. Factor number 2 is data privacy. Factor number 3 is whether the quality of code that the system generates is good quality. And factor 4 is whether all of this is secure enough and hope company confidential data is not moving out.
The debate over AI's impact isn't the only uncertainty. After making significant investments between 2002 and 2008, India Inc. went into hibernation due to the 2008 global financial crisis and the slowdown in economic growth in 2012-13. In a bid to reverse the situation, the central government prioritized public capital expenditure. Its 2023-24 budgeted 10 trillion rupee capex is thrice that of 2019-20's expenditure. Still, as a recent report pointed out, the private sector's share in gross fixed capital formation in 2021-22 stood at 36%, compared to over 40% in 2015-16. Amid the return of industrial policy, the focus on production-linked incentive schemes, and the 2019 corporate tax cut, it may appear that the time is ripe for the private capex cycle to kick off again. But will India Inc. loosen its purse strings in an election year?
India Inc. would say, you assure us a very high growth rate of GDP, we will be more than willing to invest. And the government seems to be saying, if only you invest more, the growth rate will go up. So, it is going back and forth. We are not in that momentum of very high growth rate. If there isn't a substantial change in the policy framework, then it is more on the pessimistic side, and it is indeed a grim picture. But is that grim picture inevitable? Not at all. There are things like making ease of entering business, doing something about the real estate sector. What we need is more policies, enabling policies, liberalizing policies. If there is no major policy change, then India Inc. will not be forthcoming to invest a lot more. But if there is a major policy change, then they will be forthcoming. And in what the government needs to change, it also needs to look at not just investment, but savings as well. Look at savings, look at growth, and also look at investment, instead of focusing just on why investments are not forthcoming.
On private capex, India Inc. will most likely go slow, since major policy changes could prove difficult because of the coming general elections. On generative AI, the coming 12 months will see India Inc. figuring out how to deploy this relatively new technology, even as Indian IT gets a better handle on the second-order effects of enabling its adoption. On the governance front, India Inc. will continue to strengthen practices, with experts warning that there will still be some chance of a lapse or breach slipping past the auditors.
Markets, meanwhile, have been on a roller coaster ride since the last Independence Day. Intermittent flows by foreign investors into equities to unwavering faith of the Indian retail investors and the domestic institutions aided by policy decisions of the RBI took the indices to new highs in the last 1 year.
While events like the Adani Hindenburg saga and the global banking crisis rocked the equity boat, Indian equities have proved to be resilient compared to their global peers, even amid these tumultuous situations. But what is the road ahead? Can the investors and markets look beyond the concerns that lie ahead and push the Sensex above the 78,000 mark over the next 1 year? Puneet Wadhwa and Nikita Vashisht explore in our next segment.
Since the 76th Independence Day in August 2022, India has touched several milestones. With a citizen count of 1,428.6 million, the country overtook China to become the most populous nation in the world. Markets too were in the thick of the action. The total demat account tally in India hit the 100 million mark for the first time in August 2022 and reached 123.5 million in July 2023. Nearly 3 million accounts were opened last month alone. That's roughly 50% higher than the previous 12-month average of 2 million. The euphoria among retail investors, coupled with FII and DII money, took the benchmark S&P BSE Sensex to a record high level of 67,619 on July 20. The Nifty 50, on the other hand, came within striking distance of the 20,000 mark. The mid-cap and small-cap indices, meanwhile, hit fresh highs in August. That said, it was not a one-way street for the bulls since the last Independence Day. Markets turned volatile in the second half of the calendar year 2022 as FPIs booked profits amid monetary policy tightening by the global central banks in the backdrop of rising inflation. Moreover, the Hindenburg report on the Adani Group proved to be a nemesis for the market sentiment and FPI flows. The foreign investors offloaded nearly 29,000 crore worth of equities in January 2023. The selling ran well into February 2023 as Hindenburg saga deepened in India while the global markets dealt with a string of bank failures. The sentiment, however, began to change when the Reserve Bank of India paused its interest rate hiking spree. The RBI held the repo rate steady at 6.5% in April 2023 after raising rates by 250 basis points since May 2022. Globally, the US Federal Reserve too signaled a likely pause in rate hikes amid a slight moderation in inflation. As a result, FPIs have come back with investments worth over 1.5 trillion rupees in Indian equities since March 2023. Against this backdrop, the frontline Sensex and Nifty have surged over 10% since the last Independence Day till August 4, 2023, while the broader indices have soared over 20%. Indian benchmarks have outperformed most Asian and US peers but performed in line with the European counterparts during this period. That said, analysts believe India remains the best structural story across across world markets and see the Sensex climb all walls of worries and hit the 100,000 and even 200,000 mark over the next few years. But can it hit or move past the 78,000 mark in the 78th year of Indian independence?
It's very simple. Markets have done phenomenally well. Small caps have done amazingly well. It's been like a vertical rally. I've been very bullish on small caps, I've said this on your shows to yourself many, many times. So yeah, I'm very heartened by the way markets have at least delivered on what I thought was a road ahead. Whether August or July or November, but we are definitely hitting that number, which is I think 15% away, and that is not a big ask anyway.
Sharma believes that this milestone can be achieved once the central banks begin cutting rates.
The most important thing, rest everything doesn't really matter, is basically the direction of global interest rates. That is definitely one, and direction of Indian interest rates. That's the number two. Rest, politics and numbers, etc. All of those things are rounding off errors. I think broadly the markets will react very favorably to a benign outlook on inflation and therefore a benign outlook on interest rates. And I do believe that sometime later this year, beginning next year, you will start to see the effect of that coming 3%. If large caps do 10-15%, small caps will do, usually that's like 1.5x of those returns, good in a good way or a bad way. So I think you'll easily do like 20% on small caps if large caps return you 12-15%.
That said, Chris Wood of Jefferies thinks it is only a matter of time before the Sensex hits 100,000 mark. He cautions against certain pitfalls.
The market sort of discounting no more rate hikes. So there, at some point, the market will get nervous about the election, right? I think the market has the potential to really rally. So, obviously, before the election there'll be a consolidation, and then if the current government is re-elected with a workable majority, then I think the market will really pick up momentum.
In a nutshell, the key trigger to fire up markets and keep the bulls in charge ahead of the 78th Independence Day will be the outcome of the general election of 2024, healthy macros, corporate profit growth, and geopolitical stability. On August 16, minutes of the US Fed's latest monetary policy meeting will sway the markets.
The uncertainty surrounding the global economy is slowly giving way to some hope. India Inc. too is looking forward to extending its footprint across the globe. Season of laying off is almost behind us, and most firms, including startups, are adapting to new realities. Markets too, it seems, have become more resilient to global shocks.
Well, on that hopeful note, we at Team TMS wish you a happy Independence Day. Keep watching our show to stay up to date with the latest in the realm of economy, markets, and beyond.
That's all for today. And for more news, views, and insights, please log into business-standard.com.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.